Is your broker giving you real returns? I've been in the industry for 40 years and I have seen many different things. I think overall, the industry is pretty honest, but it does attract many salespeople because of the potential for high income that one could earn. I have unfortunately seen over time that many brokers don't give the real investment returns for their clients. Now, they may not lie about them, but they will definitely leave out certain facts. It is important for the client to ask questions when hearing these investment returns to verify they're getting the whole story. Advisors who charge a management fee when quoting returns can simply state the gross return, not deducting the management fee. In other words, they say, your return was 10%. But they did not take out their 1.5% management fee, which would be a net return to you of only 8.5%. Also, many advisors, they use mutual funds and ETFs, which also charge a fee. The mutual fund or the ETF return is generally net of this fee, but it's important to know that that could be costing you perhaps 0.5% from your total return, maybe more. Now your net return has dropped from 8.5% down to 8% using the previous 10% gross return. Another trick that brokers use when quoting returns is to only quote returns on part of the portfolio. As an example, let's say you have a $100,000 portfolio and $20,000 is in the money market, $20,000 is in bonds, and $60,000 is invested in equities. In situations like this, I've seen brokers only quote the return on the $60,000 that's invested in equities when things are going well for that portion of the portfolio. When I quote returns to my clients, I do it on the total amount they have invested with us, and if we have a large amount in the money market, that was my decision, and therefore I should quote the total return on the total portfolio I'm being paid to manage, not just the equity portion. Brokers are also big on alternative investments like private equity and private loans. There is really no way to know exactly what that investment is worth because there is no active secondary market. But many brokers will quote the investment value or estimated return value, the market value, when speaking with their clients. That's going to overstate returns because if they try to sell that alternative investment, the true market value could be 20, maybe 25% below what they were carrying the value at. I remember my first job in the financial industry over 40 years ago, and the manager said, "Don't give performance or returns. You can lose clients that way." He thought it was better to talk about other things, but never, ever talk about the portfolio returns. I believe that could be the norm in the industry, but I will always quote returns for clients, good or bad, because that is the reality of investing, and you understand the reality of investing, you will do well long term. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.